Thursday. Well, different dates. It's the 10th of March. Welcome aboard. Nice to have you here. And, well, a few people in the room and a few new faces. Look, welcome to you guys. Those of you who I haven't spoken to before, it's nice to have you on board. Look, this show's all about you guys. It's not about me. It's not about Ash, who'll join me shortly. It's all about you, and you are most welcome to contribute anything you so choose. As long as it's above board, it's not swearing, and it doesn't break copyright, we're okay with that. So any questions that you might have, any charts that you want to look at, any trades that you're looking at, throw them into the chat box. We are more than happy to have a look at them for you. And as I said, Ash will join me in a moment, and he'll be talking footsie, I imagine. Might even have a trade for us first up. We'll see. Righto, before we get into it, or well, as we get into it, let's get into it and have a look at the pound versus the US dollar today and see if there is reason to think that we could have a breakout on our hands when the London session opens, which of course is now, what, 3.5 minutes away. Okay, what we're trying to achieve here, for those of you who are new, we're trying to achieve a break of the range of the previous day's trading, low of which is here, high of which is here, and the current day's trading. So if the current day's trading had a lower low or had a higher high, we would consider that to be the top of the range. And in this case, that is the case. And pound versus the US. I'm on a 4-hour chart. Sorry, I should be on an hourly chart. And you can see this is the high of the day so far, but it's also the high of the previous day's trading. There's the low. So our range would be there and there. Top of the range, bottom of the range. So what we're seeking to do is see if the market can burst out of this range and get us into a new trend, which currently looks as though it may be to the upside. But we've got no way of knowing that, of course. So how I work this is, if I can see a clear take profit, and the take profit has to be 1-to-1 from top to bottom. If I can see a clear take profit to the low side and the upside, then I would take the trade. Here I've got 92 pips before we hit a resistance level, or the resistance level, yet we've got about 115 pips of risk. So that's less than 1-to-1. So I don't think I'd like to take that. If I'm trading to the downside, how much space can I see below this entry? Well, not a lot, as you can see, but if I go out to a bigger time frame, you will see that the next level is what? Let me measure it. So our risk here, don't forget, is about, wow, 200 and something pips. That's not right. Let me go back to the hourly chart. Our risk here would be, what did I say it was? 100 and something. 105, so by the time you get your spread, say 110, and down to that level below, let me find that daily chart, 130.87. 130.87 is the level that I was trying to measure. There's nothing. There's absolutely nothing. So this may well be worth the exercise if I can work this out. Okay, I actually don't mind that too much. Get up there. There we go. So what we're saying is, if price breaks to the high side, it's got to get to there and maybe a little beyond there before we can get safe in the market. Yet if it breaks to the downside, it's got all of that space below it. I don't think it's a good trade still, because A, we are bang on the entry level for the long, which means if price just goes a little bit in our direction, we're in, and then it can reverse and take us out. I don't like that too much. If we were down here, say at the daily pivot, different story. Then we've got room to go to the high side, get some momentum behind us before we take out high, and get some momentum behind us before we take out the low. So it's a no for me. I'm not going to trade the breakout. And that's as far as I'm going to go with that. If I'm thinking of trading the pound today, what direction would I be thinking? Well, we've had a potential reversal. Potential only, because you can see where it stopped. The rally stopped bang on that horizontal level, 130, 190 something. So let's say 132. Guesswork now is, as far as I'm concerned, if we're going short or long. Very, very difficult to predict that. The only way I could trade that long would be if I had a clear reversal pattern. I've got a base, you could call. I don't think you call it a double bottom or anything like that, but it's a base and we've hit a resistance level. So I'd have to see price come back here and give me a higher low before I consider trading that long. Super counter momentum, of course. The pound has just been falling out of the sky for the last couple of weeks, and definitely a no-go zone at the moment for me. No longs, no shorts, and I'll be waiting for that higher low. If that doesn't come in, if we don't see one, then you could reasonably expect we're just going to go to the weekly pivot. If that's the case, that's the case. I don't care. Or we're going to see trend continue. Either way, I can't get involved at the moment. One thing I wanted to get involved with today was Aussie versus the US dollar. And for the life of me, I can't think of a reason other than the chart setup telling me why that would be the case. Because this versus the US dollar, it's very important that we understand what the US dollar is doing. And for that reason, we go and have a look at the dollar index. And the dollar index is telling me that the US dollar is at a strong resistance level and indeed has pulled off it. This red line here is very interesting. It's a monthly trend line. Maybe I'll make it a little bit easier to see. That might help. Pardon me. That's what I want. And that's what I want. So if we go as wide as we possibly can, there it is. That's a monthly trend line. So it's not to be sneezed at. There's also a horizontal level going through here somewhere. It's a bit of a cloud of a price, but that one's not a cloud of a price. It has been strong resistance here, resistance here, resistance here. Why is that going to fail as resistance now? Well, you could argue that there's a war happening. And I could totally understand that from a fundamental perspective. When I look at that chart, I can't not see that. And that's telling me that we've got a double top on that trend line. And potentially we've got a lower high rejecting that trend line. Or is it? And that's the question that I've got. You know, we're in the middle of the month. Well, we're not quite in the middle of the month. And yet we've got no real clear indicator, if you like, to say that this trend line, this monthly trend line, as strong as it is going to turn price around. My third eye suggests that that's a possibility, but possibilities and probabilities and good outcomes are two different things at times. I can totally see a rectangle, a box here as well. You know, we've got two equal highs here, two equal lows here, basically. And this seems to be on its way up. So very, very confusing at the moment as to what direction we are going to take next. But if I'm thinking of trading this, I'm thinking we've got a potential false break of this channel on the daily chart to the upside, which you can clearly see. We've had one of those before. And then we came back and retested before we went. Maybe we're going to get that sort of price action again. So we might be hanging around here for a little bit. Don't forget, the US dollar is deemed to be a safe haven currency as well. So in times of uncertainty, and that's primarily, well, I won't say primarily, that is one of the reasons that we've seen the US dollar index just, you know, completely take off like a skyrocket. We saw this coming down here when we came back into that channel. And once we got the bounce off that retest, she was on for young and old. And of course, yes, it's been aided by the fact that we've got a war going on. But it was and is, you know, one of the things that we need to note when we do have a nice, clear channel going on. Now we're back inside that. I think a retest of that area does get me interested short. But for now, it could just go good waterfall. So it's not clear is what I'm trying to say. That brings me back to the Aussie, and the Aussie's telling me that on the daily chart we have had, again, on a bigger time frame perspective, that big trend line going through there. Can it be relied upon on a daily chart? Good question. We're going back to April 2021, so almost 12 months of data in there, where the Aussie versus the dollar has just been going down, 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 down. Big retracement there. Is this another big retracement before we crash? And are we now at that point? I am of the opinion that maybe we are. We're certainly at a point where I can see a retracement, a decent retracement is on the cards. Yes, we've got a double bottom here. Have we got a significant higher low? Maybe we do right there. Do we need another one? We don't need another one, but can I foresee another one? Holy hell yes, right down to that monthly pivot. So the false break of that trade line or trend line, it fits both categories rather, suggests to me that now is the time to have a look for short. Suspiciously, the market would have taken or has now gone beyond where my stop loss is. Entries down here, by the way. That's a little bit disconcerting, but it's not really telling me that much at all. So I'm still watching this. I've still got the order in the market. If you want to follow it, there are the parameters up there. It's an entry short at 0.7262. And I've got a stop loss of 79 pips, which is just, I'm trading the bar, right? Trading the candle. And what else have I got? 59 pips was my first take profit, which is on DS2, I think that is, and also just above the monthly pivot. So I'm going to keep that in the market until the end of, not the end of the day, 4 hours before the end of the day is where I like to close my candles. Reason? Well, I don't want to be taken in on the last minute of trading just to see the next day the market open up with a big gap and I'm in all sorts. So that's why I don't do that. I will close this 4 hours before the end of the day. That's the position I've got. Also like pound Aussie this morning. Yet it hasn't done anything to give me a strong indicator that I'm on the right track. Reason I liked it a little bit was because of this inside bar here, which was a reprint really of the reversal bar. Then we got a rally on Tuesday, was it? Yep. And then we got this reversal bar again. I actually like those reversal bars, but I wasn't willing to trade it until I got a test of the daily pivot, which we have had. Very, very congested. Well, it is congested with patterns that I like to trade. There's one there, those three candles. There's another one there, same three candles, same level. Interesting. What's that trying to tell me? Is that trying to tell me that this is going to just smash through this level at some stage? Maybe it is. And now we're at a very, very interesting point where this intraday trade line on the 4 hour chart is now being broken, potentially broken. I'd like to see that broken, to be fair. And even if it happens on an hourly chart, I'd love to see this break, come down and hit this level, then get back above this area, retest it, and then I've got a long on my hands. The problem I've got with that is twofold problem. One is that it's super counter trend, super counter momentum. And I've now got a double top in place in a falling market. Ouch. That's not a nice scenario. So if that does set up, it will be at a very small risk that I enter the market. But I do like what I'm seeing in terms of this little pattern. A higher low in here does give me an interest in this pair. Look, there's a whole lot of things I want to go through a little bit later. We haven't got John in today. There'll be no quiz today. I didn't have time to produce one myself, and I'm sure you people would be extremely relieved that I haven't been able to do that, because the questions are normally SH1T, as you know. Hello, Paul P, and hello, Gary. Stops in volatility markets when you in profits. Stops in volatility markets when you're in profits. Okay, what do you do with your stops in a volatile market? Okay, great question. And I'm not a very good exponent of that, Gary, I've got to tell you. Case in point, Euro Yen. I was in Euro Yen short on this candle here. This candle here. And we traded this all the way down to this level here. And it was at that level, or was it this level? Can't quite remember. Might have been this level, that I decided that I'd tighten my stops right up, and did exactly that and put my stop about here somewhere, I think. And you can see what happened next. Not long after I moved my stops, tightened my stops, the market just crashed. And I think that was where, I can't remember the exact circumstance, but it was to do with the war, or whatever. Anyway, the market just crashed and doubled, would have doubled my profit. So I'm probably not the best one to answer that question in the recent scenario, but I don't think you can go broke putting money in the bank, mate. So when I've got a decent profit going for me, and this was like 3.5 to 1 or something like that from memory, I don't want to lose that. I really don't. That's hard work to get that much money. And I was at a support level. So, to my mind, that could easily bounce. And because I'm a range trader, I'm expecting it to bounce here, and I'm expecting it to go back in this direction, which would have taken all my profit away. Okay, circumstantially and anecdotally now, that didn't happen, of course. But look what's happened next. This is the kind of stuff I'm talking about. If you're not trailing your stop down here, and maybe you've trailed your stop to the bottom of that candle, you've just lost 350 pips. That's the nature of a volatile market, and it can happen at any time as news breaks out or whatever happens. That's the nature of a volatile market. So you can either approach it in a keep your stops as wide as you possibly can to try and avoid stuff like that, or the approach that I'll always continue to have. Once I've got a decent amount of profit and I've hit a support level, it's time for me to trail the stop very tightly. That's my approach, and I guess everyone's different. I know that doesn't help because I've given you an each way answer, but I think trailing stops in particular, or exiting the market, is very much a personal thing, and depends a whole lot on your attitude to risk. And mine is very, very conservative, as you know. Morning, Ash.
Good morning, mate. How are you doing?
Oh, look, bowling along okay. Finding it difficult to get in the market, to be fair.
Yeah, it's sorry, mate. I'll just close down a trade. Actually, it's confused. It's definitely a bit confused. I mean, I can show you what I was doing, but I've already had to close the position, and it might well make some money. This one, or make a bit more money. I've had to close it down at half of what in fact, it looks like it might well go the direction I thought it would, but I'm not comfortable with it. Let me just bring this in. Where are we going? Here we go. There, and you're there. Yeah, so I did take a little short here. Just sort of like trying to play it down. So what can I close that? There we go. Yeah, I took a little short here, just trying to from this point here, just trying to sort of get to the daily pivot, and it looks like it probably will get there, but I'm not seeing enough which would suggest that we're going to get a really nice move. The market does look weak this morning. Actually, it's just started to look a little bit weaker, so it looks like it might well get to this daily pivot, but I wouldn't be surprised at all to see the market pick up there. But I'm not comfortable actually trading the long from that point. Let me just blow this up a little bit so you can see it easier. Yeah, I'm not really comfortable trading the long from this point. It looks just a little bit confused. We saw a huge move to the upside over the last 3 days. I was pretty bullish on Monday, as you know, and the market has come back in kind. Today's the day really that I think that we might actually start getting a little bit more of a decision on whether the market can continue moving higher, or actually we just resume the trend to the downside. I've got very little question that we should be looking for downside. I think the conundrum is from where, and we've seen some resistance up here. We've got trend lines that are quite high at this stage up here and up here. We got the monthly pivot there. There's if you kind of like come out of the chart a little bit, you could also start looking at horizontal levels from this point over here, or maybe even somewhere in this band around about here. So there's quite a few. Actually, this one looks better. This one looks the best because it would be quite nicely in line with that monthly pivot. But I'm just not very comfortable right now with the way that the market is looking, because people are starting to potentially look at the conflict as well. We've seen here possible buying opportunity. The way the market has been over the last 2 years is to have these V-shaped recoveries, these huge like moves to the downside, and then a massive bounce back. And I think the psychology of that is difficult to let go. And I'm guessing that that's possibly what's happening, with a kind of buy the dip mentality. But the reason that I don't think we can be anything but bearish on the stock market is because, let me just blow this up a little bit so I can see it on this screen as well. The reason I don't think we can be anything but bearish on the stock market is because the possibility of recession has just multiplied, where the central bank has to potentially come in. We're probably going to get 10%, north of 10% inflation numbers from the US, and maybe that is also going to happen in the UK. So what that then does is put pressure on the central banks to have to react. Not that they want to react, but they have to react as a necessity. So they react to inflationary pressures. Then it squeezes the economy further after having, all these inflationary situations because of energy costs. So the consumer is squeezed, and then the chance of recession just, as I say, it multiplies, it goes up. So it then becomes less about the war, and the emotive move that we've seen over the course of the last week or so. Yes, it is a war move, if you like. But then we start to go, okay, well, hold on a minute. Well, what about what's going on now due to that, due to coronavirus, due to inflation, due to all these things that needed to be fixed up? And you start to say, well, recession's probably on its way. And if recession's on its way, that's bad for the stock market. Equities will not survive too well in that kind of environment. So I've got little question that we should be aiming for downside. But as I say, that the conundrum is where do you sort of start to get in? But the one thing about the one thing about trends and momentum is that if you are seeing clear momentum in a specific direction, i.e. in this situation it's down, then it becomes a lot easier to take the signals. We're not in a situation where we are seeing mixed signals. The signals are pretty clear about the moves. We've seen here on the daily chart, this is in a definite downtrend. This is a lower low. This looks like an area. Well, in fact, let's go from here. There's a lower low from this this support line here. Then you get your lower high. You get your lower low. You get this explosion to the upside, which ended up being an exhaustion bar. Then we start to come down. We see this lower low here. This area here could be the lower high. But the point is that we are seeing signals that we are in a trend to the downside, and there's nothing out there which would suggest that we should be changing tack. At this stage, sentiment is still lower. ECB is out today. Christine Lagarde's out today. Will she say something that can cheer the market up? I would have thought not for very long. Maybe for a little while. We might get a little bit of a bouncing kind, but I doubt it's going to go for very far. So that means that the signals to the downside become more powerful than signals to the upside. So that's I guess what we're looking for, and what is a signal to the downside? Well, we haven't got it yet because we've had this push to the upside yesterday. So at this stage, we haven't got that area which is giving us, well, we've got the potential area, but we haven't got the price action which is saying take the short on the daily. If we go down to the 4 hourly, the 4 hourly is still in an uptrend. So this hasn't given us a signal to go short either. You go down to your hourly, still in an uptrend. We've got this little range in here. This particular bar is not yet closed, so we can't use that. This is the range that we've got going on with the hourly. So we've got this upper and lower range. This could well turn out to be a bull flag, you know, if this manages to recover. So the signals right now, right the way down from daily to the hourly, are for upside. We don't have a signal to suggest downside, and I guess that's what we're waiting for. You know, and what would we need to see? Well, we probably need to see a break of the daily pivot, but more importantly for me, I'd want to see, you know, breaks of the trend line. There's one there. There's probably one going to be coming up here as well. And if we start to see this breakdown, that would take out the daily pivot, it would take out the weekly pivot, and it would take out this trend line, and probably take out this horizontal line of potential structural support as well. You know, if we think about where this last trend came from, that's the high end of it coming along here. And that's the low end of it coming along here.
Bit of an ask, really, isn't it? But if it did get through there, it's a pretty strong signal.
Yeah, exactly. And I'd want to get in before it got through to this point. I'd want to really be getting in around about here. So you know, which looks like quite a big dive to the downside. We're looking at potentially a 1% move in the FTSE to take us down to this point before we're able to go short. But that's okay. You know, this one up here would still be agreeable. You know, if it pops up to this point up here, that'd be an agreeable area to try and take the short on as well at this stage, because it's already proved itself as a potential point. And if we look on the dailies, there's enough here to suggest that there is a level going on. You know, there's some support here, there's some resistance here, looks like some support here. Looks like some support here. There's some resistance that's been proven yesterday. So if it pops up again, then there, you know, there is an opportunity to go short. But the signals aren't great. Shell this morning are down 0.2%, and even though that might sound negative, it opened up down 2%. So we've already sort of recovered nearly 10%. Sorry, 10 times its bearish move. So it doesn't look that bad at this stage. And in actual fact, I'm almost tempted to take a long here. In fact, I am tempted to take a long here. You know, is it against the better judgment? I don't think so. So I probably will do that, mate. I'm just going to fire this in. It looks pretty short term. You know, it doesn't look like there's going to be much in the way of a trade here, but you know, maybe sort of like coming at least back up to these levels or something like that. I think that there's a potential long here. The market looks like we're in that range, you know, and I suppose what it is defining this looks like a new little range up here, like as I said before, almost the bottom end of a flag. And it might be that the profit could be taken up here, but I'll come out of first contact, which is going to be somewhere in that area there, and that'll be enough. That'll be enough for me to stay on target with the profits that I'm trying to achieve on the daily basis. So
is that one of your? Sorry, is that one of your failed evening stars as well?
Yes, it would be. But with the failed evening star, I'd want to be going long probably here. With the failed evening star, what I really want with a failed evening star is, and I'd call it a false dusk, if you like, is I'd want to see it here, really. And this is the thing about like patterns, isn't it? It's always about context. What I'd want to see with a failed evening star is really this. I'd want to see it here rather than up here. And the reason for that is that it comes away from some structure. You know, that would give me just a bit more. I don't like it up here because it's a little bit it's floating around at this particular area. So I'm not as keen in that particular area. I prefer it, as I say, I prefer it up there.
Got a little bit of history back on the left-hand side of your chart, I suppose. Is that too long ago?
Let's have a look. So over here.
Yeah.
No, it's not. It's too long ago for this pattern. Yes.
Yep.
Yeah, it'd be too long ago for this pattern. I with this pattern, I'd want to see it as part of the run, of the current run. I wouldn't want to see sort of like, you know, historical moves back here. It's kind of much more interesting to sort of like be yeah, as I say, kind of part of the run. you know, the only way you could use that really is a level of support. So I wouldn't use that pattern for that. But you know, the market looks okay, and even in saying that, you know, even with this long, I'll probably take on another long down here, and only because at this stage, you know, the market looks okay. This is now a point where I'll hedge, and I might even flip position, but the market looks all right. You know, Rio Tinto is really suffering. So there are some mining stocks which are suffering, but some of the other stocks are doing okay, you know, from what I can see here. So I think there's probably going to be one more bounce to the upside before we start to turn around. So let's see what happens, mate. Let's see what happens with the market. But I suppose the point of illustrating all this is that I'm with you. I think this market is just a bit confused. You know, I like to get a trade in every day, and I haven't not traded every day for at least a couple of years, unless I'm on holiday. So I'm not going to stop now. I'm just going to look for opportunities.
How interesting. I'm a bit the reverse. I haven't traded for ages.
Oh, you haven't taken? Well, I mean, I suppose
I'm not in the market. Sorry, I've placed orders, but
yeah, but you just not been entered.
Mm.
Yeah.
Yep. Which tells me two things.
Yeah.
One, I'm not in sync with the market, and number two is my system works because I'm not in bad trades.
Yes. Yeah. Which is much more important.
Much more important.
You know, and I suppose that's the thing with this stuff, isn't it? You just got to be clear-headed and understand that that things in this kind of market can go very, very much for you, or all of a sudden just turn on a dime and go against you. And how are you going to handle that that particular scenario? I
That's what I was saying before to Gary. I mean, that to me is pretty much the key in a volatile market for myself, for my personality, my risk profile, is to not put myself in those positions. The flip side of that is, if you do have an appetite for risk, then you can make a mozza if you get on the right side of these moves.
Yeah.
So you know that's the flip side.
Yeah, no, it's been a decent period for me, to be honest, mate. I mean, you know, it's kind of my profit lines have probably more than doubled over the last sort of few months because of the situation and the scenario. Yep. And I suppose I kind of aim for a specific amount every month. But if the market's offering more, then I'm gonna like push to take that more. But I will accept that this isn't normal. You know, I mean, I could sort of like be flying around saying, you know, I'm making 12% a month, but that's just rubbish. I did make, you know, 12% a month in this current period, but that's not the general sort of way that this approach works, because the market isn't usually like this. This is a very unusual market. It's offering opportunities where, generally speaking, markets don't offer these types of opportunities. That, you know, you don't really see the likes of the euro.
No,
I mean, you don't see the DAX yesterday rallied 8% in a day. I mean, that is just so unusual. You just don't see that. Yes, you might see that once or twice during a whole year, but not over a course of what is turning out to be like a month. You know, a month-long period where there are these big opportunities. So you know, I'm at pains to get too overconfident and too kind of too gung-ho about this and saying, you know, actually you know, this approach makes double-digit figures, because I mean, I suppose maybe it could do actually in a normal scenario, but I don't look for that. I don't look for double-digit figures. It's just not I'm not comfortable doing that. But in this environment, I'm a lot more comfortable doing it, because that's just, you know, the way the market is moving. You know, 15-minute bars are kind of like, you know, can be 100 pips at times. It's crazy. It's a crazy situation, really.
Yeah, as you say, it doesn't happen too often. And if you have a look at the curves on the average daily range of most things, certainly currencies, I assume other asset classes are the same. The ranges are, you know, expanding, still expanding. You know, they haven't cooled off at all yet. So
no, they haven't.
I assume the fear index, or the VIX, is pretty much the same.
Well, yeah, have a look at the VIX, because, you know, it's important to look at the VIX on a daily basis at the minute. And if you look at where the VIX has kind of come from down here, this was the price action last year, and actually you can see with the VIX. Let me see if I can make this just a bit cleaner somehow. Just look at this to start with, because you can see that really with the VIX for quite a long period, we were in this kind of little boxy range down here. Whoops. In this little boxy range down here. Let me grab this properly.
I see there's a series out called the Fear Index at the moment. I haven't seen it yet.
Oh, really? Okay.
I don't know if it's any good. Could be rubbish, but
yeah, I've not heard of that one. Yeah, so we were with this boxy range for a number of years, or if not months, and then all of a sudden we start to take off. Now we're starting to get to the upper end, if you like, of a different range. So this is where you sort of like start looking on the weeklies, and look how hot it's looking at the minute. You know, I think this area back here just goes to kind of illustrate how the VIX would tend to move. But look, I mean, these are just kind of enormous moves on a weekly basis. This was during COVID this year. Then it comes down, and then we're starting to pick up again, and we're getting up to the upper range of this kind of the upper range of the new box, if you like, for getting this particular candle pattern up here. So the VIX is getting very, very hot. But again, you know, over the last few sessions, we've just seen a little bit of weakness coming in. You know, the VIX is also a little bit unsure now, I think.
Well, I think you can expect that after, what are we now, in the second week of the war? So, you know, the market has had time to react, if you like, now. Yeah. And now it's kind of settled down time. Perhaps, you know, it may not be the case, because if any given new event takes place, then the market will react again. But until something does, I think we're probably going to settle down a little bit.
Yeah, well, and we got the same with gold. You know, gold. Look at gold's bar yesterday. Pretty decisive bar from yesterday. And if you look at this on a weekly, now I know we're not closed yet, but if this ends up anywhere near the lower band,
another big double top coming up.
Yeah, exactly. I mean, look, you know, you've been talking about this for a long time, and now I think that you could definitely say, okay, you know, this would qualify. If this is a refusal bar here, this qualifies. You know, you can definitely see sort of people taking profit here as gold moves up to that point. Does it now push into this area? And you know, we're going to need to see some you know, light relief from some of the powers that be, and possibly even some sort of deal. I think there's some meeting going on today with some leaders that might suggest that we could see. Well, we're certainly sort of, you know, possibly opening the door for some kind of narrative anyway. I don't think we're too close to a resolution necessarily, but at least they're talking. And then if you look on what we've got today as well, if the market forgets about the conflict for a little while, then it might start focusing on the ECB press conference, CPIs from the United States. I mean, that's not particularly good. And then Governor Lowe, okay, speaking later on, that won't be a necessary driver. Unemployment claims, these little bits and pieces. But around about midday, there is a whole bunch of action that is going to be taking place with the market. So before then, I think we might just, as I say, we might well just stay in some ranges. And I'm just seeing the FTSE pop down a little bit here, so I might consider whether there's another bounce point here. Yeah, let's take that as well, and see if we can just hedge the just average this up a little bit, and we'll see what happens, mate. We will see what happens. There might be a hedge coming in later. Now, you know, this is really sort of crucial for people not to just see this as dollar cost averaging. I'm not just buying and buying and buying. I'm buying and buying, and when it gets to the point where I think the market actually is going in the opposite direction, then I'm going to hedge. So if you don't understand hedging and you don't understand how to hedge, then you can't just buy and buy and buy, or sell and sell and sell. Oh, David, can you talk about multiple time frames and entering too early? I've been pondering of waiting for the higher time frame to close before entering trades. I usually have the direction right, but I get chopped up when I enter on lower time frames. Okay, can you see that question, Jeff?
Yes, mate. Yep, got it. David, may I ask what criteria you are using to enter the market? Because that will probably determine the answer that I give you. But my answer immediately to the first question is I trade on higher time frames at the moment because I don't have time to trade on lower time frames. That said, I believe for my personality and my risk profile that is also pertinent in the current circumstances, because I don't need to sweat out a 15-minute chart or a 5-minute chart. And my system doesn't allow me to be in the market unless something else happens, if you follow what I'm saying. In other words, I only enter if X happens because I'm looking for Y. I don't enter at market, in other words. I don't have a clear idea of direction that allows me to say, okay, I'm just going there no matter what. So in other words, I need to have an event to take place on a chart before I'll enter the market. That's kind of the easiest way I can explain it. That lends itself really well to daily, weekly charts. It also lends itself well to smaller time frames in a non-volatile scenario. If I'm in a volatile scenario, I could very easily be taken in and out in the same candle, and I don't like, doesn't suit my risk profile. So for that reason, I stick to higher time frames. That said, if you've got a good reason to enter the market on a smaller time frame, then I see absolutely nothing wrong with that, because you can get a very good reward for your risk if you're willing to take that risk. And these are the times where that reward will pay you big time if you get it right. The issue is, as you say, you get chopped up in a market that is very, very uncertain. And that's why I asked the question, what criteria are you using to enter the market? Is it a system, or is it, okay, I see the direction where the market's going to go, so I'll just enter here and put my stop loss here? So, you know, so many variables that I really can't give you a defined answer to suit your circumstance. All I can do is put it into my circumstances. And for my circumstances at the moment, longer time frames are certainly the way to go. Ash is completely different, of course.
Yeah, I mean, I think I know, I understand what you mean, David, and I think there's I've got kind of two I guess answers that I would offer to you, and the first one is more of a question: have you done anything in the way of keeping a journal to suggest whether, even though you do get chopped up on occasion, in the long term, does the approach work? You know, because that's what you really are. You're never going to win every trade. So, you know, in over the longer term, yeah, okay, you're going to get chopped up sometimes, even when you are right, which is incredibly frustrating. But actually, in a way, does it matter? Because you are able to win more than you are losing. So that's the first thing. But the second aspect of that is, if you are entering, let's say that this is the bar. So we're on a 15-minute time frame, and we are saying that we are going long. So we like the way the market's looking, and we're looking to go long on the market. Hold on 1 second. I wonder if I should just. Where's that going to? Oh, no, that's okay. Hold on, give me 1 second. I think here we should be okay. We should be okay. Yeah, okay. Let's just do that and do that. So we know we got profit out of that one, just so I can focus on your question, but we know we got profit there because the second one would have given us some profit. So we're pretty good for the day. Right, now let me focus on, what's that, buddy?
I said, well done, mate.
Thank you, mate. Thank you. Let's focus on your question. So I find it really difficult to have trades open and answer a question. So there was literally a couple of pips in that. It's no big deal. So now, if this is the entry bar here. Now, hopefully this will explain it in the way that you need it. This is the entry bar here. Let me see if I can make that. Can you see that, Jeff, well enough, or is that too small?
Sorry, mate. I was looking at another chart.
Okay, let me just make it a little bit bigger. Let's say that this is the price action we've got. It's moved to the upside. Now, what we've got is a 15-minute chart. So we've decided on our dailies, if you like, that this is going long. And the price has moved up, it's come back, it's gone up, it's come back, it's come back. And then we see this bar here, which is our entry bar. Okay. So we are looking at this one here. Oops. This is the bar here. You see that okay?
Yeah, mate. Yep.
Yeah. Okay. So there's our bar. Now, the way that I guess most people would think about this is by taking the long just above the bar with the short. With the stop loss below. So there's your long there, and there's your stop loss down there. Now, the reason that I wouldn't personally be doing that, and this may be one of the reasons you're getting chopped around, and correct me if I'm completely off the mark here, but the reason that you might be getting chopped around is that this bar is not structure. You know, I'd be looking really at saying, rather than putting my stop loss there, where's the lowest point that we've been to? You know, so in some respects, I suppose I am looking at what the longer term position has been, but I'd want to pick the lowest point in this whole structure before I was getting into a trade. So here's another example here. This bar here, we got the nice little engulfing pattern. I don't want to trade at the top of the engulfing pattern. I wouldn't want to trade, I should say. I wouldn't want to trade at the top of the bar with a stop loss at the bottom. I would want to use this as a signal. Yes, I'd want to say that is a point which is suggesting that the market has got some strength. But because of the possibility of being chopped around, I still want my stops down at the lower end of the structure. Now, I know that's probably not necessarily conventional. I don't really know whether it is or not. I know people have taught different things, but that would make me a lot more comfortable personally, because at least that way, if it does break this point, then there's at least the suggestion that the longer term charts are breaking down. And you've still got enough room between this point and this point to make a decent profit. Okay, so the multiples aren't anywhere near as good, but this is about safety, and it's about staying in a position rather than saying I need to make 5% every time. Now, if you are going to use this bar, then at that point, that would be back to question one. What does your journal say? Does your journal say, actually, if you use these bars, the occasional chopping around accounts for it doesn't diminish the profit line? You know, the profit line is still there, because if I enter more often than not, 6 times out of 10, when I enter on these bars, then I get enough multiples of profit to negate the 4 times out of 10 that I'm losing. So if that's to happen, then it's fine. But if you want to sort of like that little bit more safety, and you want to see if you can stay in trades a little bit longer, I'd be saying, where's the lower end of the structure? I can't say that this is the right bar. You know, that's effectively what we're saying when we enter on this. This is the bar it's going to take off from. Well, that bar is a good signal, but it might not necessarily be the defined moment that it's going to turn. But what we do know is that there is, you know, that there's been some support down here. Those prices come down. So yeah, that's the way I'd be thinking about it. I don't know what you think about that, Jeff, but that's the way that I would look at it.
Yeah, look, perfect. One other thing I would add to that, Dave, would be know what your average true range is for that day. Because if you're putting a stop loss inside of that average true range, the chances of you being stopped out are increased. So in other words, exactly what you're doing, if you're using higher highs and higher lows, or swings, if you like, as your stop losses, that makes perfect sense, as long as it's the right swing, as Ash has just described to you. But if that is inside the average daily range of that day, then maybe you need to rethink where that goes. Because say you're entering the market on the high of a candle, which has just broken a level to the high side. So you want to buy that bar. And your swing low, immediate swing low, is inside the average true range of that day. So you're expecting the market to go another, goodness knows how many pips, I don't know, wherever your target may be. So have a look at where your target's going to be, and then come back to the stop loss and see if that's inside your average true range. If it is, then maybe you need to think, okay, that's not enough. Maybe I need just a little bit more. That might be 10 pips, might be 20 pips. I don't know. The problem with that is, in most people's psyche, that means, oh, I'm giving away reward because I've got to increase my risk. Yes, you do. That's true. And I think that goes back to the initial question, which is trading in a volatile market. In a volatile market, you have to expect that the market will be, guess what, volatile. And for that reason, you are going to get major swings or major spikes in either direction. And I think the average true range, just on the short term, right? So if you're thinking, okay, I'm trading on a Thursday, what's my average true range for the last 2 weeks? So 10 days of trading. And if it's, around about 80 pips, your target's 40, but your stop loss is 20, then it's not enough. Get outside of that 80 and make it 85 pips. That would be something that I would consider.
This is what David was looking at. So he uses levels drawn on the daily and then wait for breaks of structure on the 30-minute higher high, higher low for your stop. For example, last 2 days I was entering long on the Swissy, but both days was stopped. Okay, so that's when you say last 2 days, I presume you mean these 2 days. So let's have a look at this, Jeff, in a bit more detail, if that's okay.
Well, let's see if we can apply what we just said and see if it actually works. Yeah.
Yeah. Okay. So we're looking at these 2 days here. So yeah, I mean, okay. So the first thing is that the low. Was the first trade, David, this one here? Because if this is your first trade, as an example, then putting your stops at this point works. Rather than putting it on this bar. But no, it couldn't have been that one, because you would have been out a winner.
Might have been the break of the daily pivot. Might have been that bull bar that broke it. I don't know. Oh, there's no swing to close below. That wouldn't be that one. Don't know.
I don't suppose you could come in the room, David, because you could get on Zoom and you could show us your chart and we could have a look. But let me see. So this is what. So let's just break this down a little bit. Okay. So we got a little bit of a range going on here, and within this current range, we've got a bit of structure there. Then we get this higher low here. This is a higher low here. We get this higher high here on the 30. Then we get a higher low here. Then we get into a little bit of a sticky position, but then we start to take off again, and we get the higher high here. So there is this little trend here going on. If you took this particular position here, then you would have got stopped out. But again, I'd want my stops under here rather than under this point here, but personally, particularly because this is in a downtrend as well.
Maybe that's where they were, but too tight. Maybe you just got pipped out by a fraction. I don't know whether that low is lower. I don't know.
Okay, that's fair enough. Well, you might have got pipped out there. To be honest, I don't know where else you would have got in on this one, because this bar is an obvious bar to try and get in at, I would have thought. Coming back again, this bar, no, that's no good. That's no good. This bar maybe again looks pretty good. But then you wouldn't have got entered into that one if you're entering the higher the bar. Yeah, it would be great if you could come on. If you could get in the room, it'd be really good, because then we can sort of see what the problem might well be, or certainly not what the problem is, but maybe a way that Jeff and I would approach it. Because if I was looking at this on a long and I saw this point back here, then I'd be the same as you. I'd be thinking, okay, well, this is a bounce area. This is a definite double bottom, and it looks like a potential bounce area. Then I'd start looking at the next time frame down, which would be the 4 hour, and there's another double bounce here. There's one there, one there. So that's starting to look pretty good from that particular point there. So then then I'd start drawing my trend lines in. That one's not great, but it's there. That one looks okay, you know, when this starts to take off. But I still don't know where it would necessarily go wrong. This looks like a pretty good bar here as well. If you're looking at an engulfing bar, that looks like a bar to the upside, so you wouldn't get stopped out on that. Maybe the problem is that you're going straight from the daily to the 30-minute. That could be some of the issue. Maybe that, because there are obviously other structures within the price action down here. You know, I'm not sure going straight away from the daily to the 30-minute is necessarily going to help. You're going to need sort of like some other time frames in between, because really the daily's relationship is better with the hourly than it is with a 30-minute. I don't know if you agree with that, Jeff, after being a big component, a proponent of the 30-minute charts, but I would have thought the 30-minute relates better to the 4 hour than the.
I actually don't use them to relate. What I use the daily for is to give me a potential direction for the day. And then I don't care what happens after that. If I can go down to I don't go beyond the 30-minute chart. So my 30-minute chart is pretty much for analysis as to where we're headed inside that day, if that makes sense. The daily is to tell me where we're headed, full stop. The 30-minute chart is used to tell me where we're headed in the next session or in the session I'm in. So it doesn't really matter whether I go from the daily with that in my head. Okay, I want to go long. The 30-minute chart is telling me, okay, now's the time to go. So really, are they? Yes, they're related. Does it matter to me? No, not at all. Not at all.
Okay.
David, first trade was the breakout. Okay, so above the breakout of the daily pivot. And your stop loss was, I'm assuming that's the bar. That's the only breakout I can see yesterday. Oh, sorry, not yesterday. Tuesday is that buying bar, which is, a big morning star. So he's bought above there. Yeah.
This one here?
Yeah. So he's bought above that, I assume.
Buying above that one?
No, above the breakout bar. The buying bar, the decisive buying bar.
Oh, I see. Let's see if I can grab it. This one here.
No, the one before it. So buying above
this one
there.
Yeah, gotcha.
So I'm imagining that's the entry. And the stop loss should have been safe.
Oh, I see what you're doing. Okay, so what you're trying to do is get the 30-minute here, enter on a 30-minute to see if it can go up. rather than using the daily stop losses. Okay, I think I understand. Okay, so that means we are looking here.
But then I'm not sure how he's got stopped
Oh
out.
no, hold on. This isn't a daily. This is the daily here. Okay, all right. Let's have a look. If it comes back, I mean that's the first signal.
Yeah, that's the bar you want to trade.
Yeah, because that's the first signal this is holding. I mean, you're going right into the daily pivot, so not great, but it's still.
Yes, but the daily pivot at that stage has been broken and rebroken, so it's not as powerful as it was before.
Right. So decent bar though, really good bar, higher low.
Yeah, nice red body. I like that.
I mean, there's the maybe it's just the wrong area. It's difficult to know exactly what it is.
Yeah, maybe we're in the wrong spot.
Maybe
but
we're in the wrong
looks like the breakout area to me.
If you could give us the time and the price, that might be okay. What's this? Yeah, if you could give us the time and the price, then we can actually have a look at the bar that you entered on, because that does look like the right bar to me, and as it does for Jeff as well. And if we were coming back, you know, even in this area, this bar you could have been, you know, thinking that could go long, but you wouldn't have been entered into that. This bar again, you might have been thinking, okay, there's a long there because of this horizontal line, but you wouldn't have been entered into that. There's a little belt hold here. This belt hold looks pretty good too. So you might have been entered into that one, but then there's another, you know, you probably could be coming out of the daily pivot because it's the first one. So that would have been break even. Here's another bar here. You know, actually it's quite a nice looking area, doesn't it, Jeff? When you sort of like break down where the signals are, where the really good signals are on the bars, they all look really good. They all look really solid. Like this bar, this bar, this bar. All of them
that's the bar money. For me. That one, double bottom, higher low. Yeah,
yeah,
beautiful.
Yeah. I don't see any others really on the 30-minute that would be that favorable. That you might be about to get one here, which would suggest again that there's a chance to you know, try and get some upside from this point. Another nice looking bar here, but I don't know. I don't know where you're getting in on that, so we'd have to see it.
Yes, but as you say, from the chart, it's hard to see where David has actually been stopped out. The only possible stop out there I see, if he's using a swing low or a higher low or whatever, is just lost it. Is that candle there?
Which one?
Come back to the next low.
Here.
That one.
Yeah.
That's the only one I can see we'd stopped out on.
Yeah. But you know what? This is one of those candles that if you do get stopped out on it, you're going straight back in, aren't you? Because of the way it looks.
Well, some people do.
Yeah, some people do. Yeah. And maybe that's sort of like also part of it. Maybe you just have to accept. And this is the thing about triggers and signals, is that you may well be overall right, but the signal might not be. Either you might be sort of misinterpreting the signals. You might be sort of like not putting enough weight on the really strong ones. And if you are overall right, maybe you need to accept that you might not get the absolute correct bar. So you might have to give yourself a rule where you go in at least twice, which means that you've got a half your risk in the first one, which is absolutely fine. I think there's a way to iron it out. There's definitely a way to iron it out. Some of it is going to be the journal. You know, it's just logging down what happens when I take these trades. You know, how often am I getting stopped out? Are the bars that I'm going in at, are the specific bars as well? You've got to make sure that you know exactly what you're looking for. Are the specific bars that I'm going in at overall 6 out of 10 times, as I say, do they you know, provide a winner? Because really, under this whole thing, all we're trying to do is make money, and if we make huge percentages, really it's a bonus, because you know my first sort of directive, if you like, is to beat the bank, beat any other asset, any other place I can put my money. I want to beat it. I want to beat Bitcoin. I want to beat gold. I want to beat the bank. I want to beat BP, if you like, or any other stock. I want to make sure I can get a better return from sitting here and doing this than anything else can return to me passively. Otherwise, I may as well just put my money into passive. Now, if I can do that over a course of 10 trades by losing 4 of them or even 6 of them, depending on your profit risk reward ratio, then it's worth doing, and it's absolutely fine. But you can't know that until you log in it and really sort of analyzing your trade behavior. And it's a real shame.
As much as you think you can remember each trade, you can't. It's not possible.
No, you just got to look at the data. You've got to look at your data and your behavior, and see if you can establish a really good journaling process. Or if you don't use a journal, which not everybody does, but if you're pretty certain about which direction you're going in, then it might be that your stops are in the wrong place, you know.
And the journal will tell you that.
And the journal would also tell you that. Yeah, absolutely. Yeah. Though it is difficult to know exactly, you know. I mean, I'd really love to know more details about this particular trade. If you know, with the time and the price, we could have a really good look at it, because the actual area looks good. I mean, I like your thinking going long here. You know, that makes a lot of sense to me. You know, there's no reason to my mind that the pound should be breaking through significant levels of support against the Swissy in this current stage. The S&B is still continuing to buy foreign currencies. They will manipulate their currency as much as they possibly can to make sure it doesn't get too overvalued. The UK is relatively solid economically. Its inflation is starting to get out of hand, so the Bank of England will probably be forced into raising interest rates. So there's little to suggest to me that the pound is going to all of a sudden break down support, you know, against the Swissy. So I like the thinking. I really like the thinking. I think your sentiment analysis on that is correct, but when it comes down to the entry, it's difficult to know where you're going wrong without knowing which ones you're entering on, because the actual area here looked like it provided some pretty good signals.
And as you say, sometimes it's just the way it is. You can do everything right and lose a trade. Everything. You know, that's the nature of the beast, and that's why we don't put 20% of our bank on any trade, right? Yeah, because we don't know. It's completely random at times.
Yeah.
Have we just had news from the euro? Looks to be moving.
It's moving, is it? Gotcha. I see. Yeah. Well, absolutely, David. But it's, you know, so David is saying that that the whole of last year he was thinking about deriving direction from the market structure. Now he feels that he's learned how to do that, which is amazing. Yep. Now he's running into the issue of using candlestick entries or limit orders at breakout. Or first pullbacks, and he says, well, from one mountain to the next, which is brilliant, because actually you're recognizing that there is always something to cross. And if you've understood market structure, then you are, I think, more than 60-70% of the way there. That is a big lesson to learn when you understand market structure. It's a huge one. The candlesticks, the limit orders at breakouts. I understand limit orders at breakout. So what I think what you're saying is that if you're putting limit orders in, like here, let's say. So let's say we got this going on here. There's a higher high here. Okay, here's a high there, and there's a low there. Then you get this higher high. Now this is where the price broke away from. So if you're putting a limit order in here, then really, if you're concerning yourself with market structure, then your stop should be at the lower end of the structure it broke away from, in my opinion. I'm not saying that you should, but that's the way I'd be looking at it. Now, if again you're looking at here, if this is a breakout from this high here, so we get another high here, then the structure really is here. So you're putting a limit order here, and again your stops are down the bottom of the structural point. Now this starts to get a bit crazy here, but then you got another sort of structural point here. This area here is another sort of structure. It breaks through, your limit orders there, and your stops at the lower of the structure. Because that way, what you're saying is that this is in an uptrend, and the uptrend can be still in existence right the way here, because it just gives you another double bottom. So your stop should be below the structural point, not in this area. Now, if you are not going to do limit orders, if you're entering on candles, it's a completely different thing entering on a candle. If you're entering on a candlestick, then your stops can be on, the candle pattern. So that's two different ways of trading. Maybe that's some of the problem, is that you're mixing.
Yeah, mixing signals. Yep.
Yeah, maybe you're mixing two approaches together, which you can't really do, because if you are entering on a candle, what you're saying is, I am seeing a break to the upside here. So this is my higher high. And as the market comes down, I am waiting for a signal to get in before I take the trade. I'm not putting a limit order in. Actually, I'm going to do a stop entry above the candle. And so I'm waiting for the market to bounce. And when it bounces in this bar or something, then I'm going to enter using the bar. Because as I say, that they sound like you might be mixing approaches to a degree. I like the limit order approach, but I think Jeff would probably go for the stop approach.
Yes, because I trade candles, and
you trade the candles,
and I don't trade levels. But look, I totally get trading levels. I wish I could do it, and it's one of my things that I want to skill myself at is trading levels, because I can totally see how it works.
Yeah. I mean, I think they're, but they're both valid. They're both valid. They're both valid ways to do it, but I don't think you can go for both. I don't know. Maybe you can. Maybe you're going to come up with a system where you.
Well, not at the same time. I mean, you can't, as you said, you can't mix. Okay, I want to go long here because of, and then change it to but this system says put my stop loss here. That you can't do. You can't find an entry on a candle and then put your stop loss where your structure says.
No, because then it's not a limit
or
order,
vice versa. That's right.
It should surely be a stop order or a market order.
I mean, nobody loves structures more than I do. I don't believe, and I really don't take advantage of them like I should. Really don't, because the levels are so clear to me at times.
Yeah,
and my channels and my rectangles and my triangles, and all those things where I'm just continually getting bounces off them, and I'm going, shivers, went to the bottom, no candle pattern there that I could have traded. Well, what about the bloody level, you nong?
Yeah. Do you know, mate? I think it's really interesting, because I actually think that as you go through sort of like your trading experience, you see levels clearer and clearer and clearer and clearer. And yes, to take advantage of that, it just sort of, it seems to be kind of like the right sort of step.
Yep, agreed.
I mean, it's a shame we can't get to Bali, isn't it, really? Because we could have a bit of a chat about how to.
I had a certain New Zealand fella in my ear the other day saying that that could be happening. So I don't know.
Okay, well, maybe when we're next in Bali, we can look at it again, because I mean, I think we have a very similar kind of approach to how we're looking at the market. It's just the entries are sort of like very different.
Yeah, indeed, absolutely. Do you want to know what I'm looking at before we go?
Yes, we do indeed. Oh, thanks, David. David says how you explain it now makes a lot of sense. They are two schools of thought, and maybe it's too much to mix it. Great. Okay. Well, let's see if we can continue.
Trade them both by all means, but just trade them separately.
Yeah, and log them separately. Brilliant. Okay. Well, it's good that we've managed to kind of get some clarity.
Thanks, David, for the question. That's exactly what this show's all about.
Yeah, for sure. Yeah, let's see what you're looking at then, mate, and then we better push off before we get to the quiz.
Not looking at anything, going home. Bye. No, there are a few. I think I mentioned pound Aussie before. If I can get that back above this support trade line in particular, well, it doesn't really need to be above the daily pivot anymore, because the daily pivot's been smashed a couple of times. It no longer holds that much fear for me. So I'm happy if we get a couple of consolidating bars under here. We've probably got the second underway right now on the 30-minute chart. Get back above here, pardon me, and retest it. Then we can look to trade long, either off the retest area if you're that way inclined, or a little bit safer on the swing that is caused by the pullback. So that's pound Aussie. Look, Kiwi Yen, I have been hunting Kiwi Yen a little bit, and it is still inside the bar. That is telling me that this is going short. Now, the reason I think it's going short is structurally, once again, because we came back to the top of this range. Now, that range is a little bit, how's your father? I've got to say, it could well be there, to be honest. The top of that range. Bottom's pretty clear. But we came back inside that range. We retested the top, and this is the structure part that I find fascinating, because I keep seeing these, and again, straight off the top to the bottom, straight off the bottom back inside to the top, and I'll be looking for exactly the same thing to happen again. Now, I'm not going to, because I'm not skilled at it, I'm not going to place an order short here, but I'll tell you what is a good ploy. If this were to be a decisive candle, and let's say it closed there, then I think a good ploy is to put an entry short underneath that bar. And the reason is, if the bulls are truly in charge here, price should just go and challenge the high. Yet, if they're not strong enough to push it through this horizontal level, then they're going to be wrong here. Here's where they're going to be wrong, because here's where their stops are going to be, right? And if they're long, what are stops? They're sell orders, right? So you can pick up momentum here simply by picking up the stops. And if you're willing to take profit reasonably early here, probably at that trend line, that horizontal level there, for instance, then I think you can actually make sense of that. Maybe that's the one I need to start practicing on. But I mean, that candle's not closed. It's a bloody weekly candle I'm talking about. So forget that for now. Have I got a false break here? Kind of interesting. Let me have a look at the 30-minute chart. No, it's throwing me dummies here. That would already not have worked. So no, not interested in that. But I am still looking short at this point in time. So the daily tomorrow, if we're still inside this bar, I'll still be looking to trade it short, maybe as a false break of resistance. Euro Yen, yeah, like that one.
I do. I really like that. Kiwi. I'm quite bearish on actually at the minute.
Mm-hmm. Interesting. Euro Yen. Here we're talking about these V-shaped recoveries, right? This is the weekly chart, 30-minute chart. Actually, go to the 4-hour. You can see exactly what we're talking about. Some, if not most, of these currency pairs have done that at some stage over the last couple of weeks. You think you're on a winner? Bang! Sorry, we're back to where we started again. If I'm looking at this chart from a next direction point of view, I've got to be thinking long here. but I can't trade it long until I get a pullback. So same applies. I've got a market structure here that's telling me that we've now false broken the bottom of that structure, which is now getting a little bit long in the tooth. So the longer it is, the stronger it is, as far as I'm concerned. And we've got a false break, not only of the structure, but also of that support trend line, perhaps coming up. Can't trade the bar, but I can trade it if we get a pullback here. So that's what I'll be looking for on Euro Yen. Now, Aussie Kiwi has now gone into that range that I was speaking about before. I was so keen to get short from here. And again, exactly what we just talked about. I was so keen to get short here and couldn't because my candle patterns didn't turn up. They just didn't front. There was an opportunity there, but I don't trade red bars short. Fool me, right? And it did exactly what we expected it to do. Now we've got a false break of the bottom side of it. We're back inside. We've got a higher low, and we couldn't pick that one up either. Maybe we now can pick it up if we get a daily pivot bounce and a candle that suits us. Or we can practice limit entry. Euro pound, this is the one that's kind of weird, but reacting absolutely beautifully to the structure. The structure, of course, being this broadening pattern. So it comes off the top, finds its way to the bottom. You would think euro pound, euro against the pound, euro is going to be weak against. Sorry, structure says no, and shoots off like a skyrocket. Now above all the pivots, it's come back inside the descending channel, which it did before. You recall we were trying to pick this up to trade it long up to here. Hasn't happened, but maybe it has this time. I can't answer you as to why the euro is going to be stronger than the pound, except by this market structure. It is a bit messy now, but certainly be looking for a pullback if I was considering that. Swiss yen, we've been looking at that for ages and trying to trade it as a retest once we've re-entered this channel. Somewhat of a head and shoulders, I suppose. If that's the case, the neckline's right up here and you're going to have to wait for it to break. Price action is just crazy on this pair. Doji. Too tough to trade, but I'm still looking for the downside. CAD yen's come back inside the range. And guess what we're looking for, guys? Yes, a higher low in this vicinity. Test of the daily pivot, bang, get up to here. But you've got to take profit before the pivots because you can see what's happened there before. There's so many of them that are just, giving me exactly what I need to see. As I said before, Aussie dollar is giving me the indication that it has broken false, not only of the rectangular range, but a horizontal level sits here as well. And so does a resistance trade line. So you can see that horizontal level. It's not super strong, but it has got history as support and resistance throughout that period. And just one more little test of that. As I said, it's not the best level of all time, but it has got history, no question. And I see this going back down here. The dollar index we had a look at before, and the dollar looks to be at a strong resistance level. I think I said that on Monday as well. So that makes this one just that little bit more difficult to catch short. And if commodity prices, I think they've come off a bit. I don't know, I haven't had a look at them, but
a little bit.
Have they? Yeah.
Yeah.
But if they maintain their rage, then so will the Aussie. So this is a tough one to pick up.
Yeah,
I've got to say.
I totally agree. And actually, when it comes down to the Aussie, I think because it is so commodity price driven, some downside could be quite brutal if they do start to calm down, because the Australian economy is in decent shape, but they don't seem that keen to be looking at any interest rate hikes. Whereas others do.
They certainly don't, and haven't been for
nowhere near the same
time.
problem. They haven't got anywhere near the same problem with inflation in Australia as they do in the United Kingdom and the United States. So I'd be bearish on the Aussie, but not because the economy is not doing well, more because I think that the central banks in other countries are much more likely to be more hawkish.
Yep. So anyway, that's a little taste of what is on my agenda, and it looks like I'm going to have to force myself to get in front of some charts, because they do look to be sorting themselves out the way I want them to sort out. And if that's the case, then I need to be in front of the charts. Sadly, I'm on the road all day tomorrow. Another $1,000, $1,000-kilometer trip tomorrow. So,
Oh no,
boy, oh boy. It's okay. I'm setting up retail outlets all over the state, so I won't have to do that all the time.
Oh, amazing!
It's all coming together now. Yeah.
Oh, amazing, mate. That sounds really cool. Yeah,
Tiring.
I mean, tiring. Yeah. No doubt. When it's all done, though, then you can settle down and get some trading done. And
absolutely. Look, I'm really looking forward to it. Actually, getting back to full-time trading. It's really something I want to get back into.
Yeah. Well, mate,
because there's a lot happening.
There's a lot happening, and it's great that we still got our hands in with the Trading Buddies show. We're certainly not going anywhere.
No, absolutely not. All right, let's do it. Let's get out of here.
Let's get out of here. Thanks so much for the guys for joining in. As always, thanks, David, particularly for being our guest of the day. It's brilliant to have questions and talk about charts and see not necessarily what any issues you're having, but maybe some other things that you've noticed as well. So anybody is welcome to post or to come on camera, to come into Zoom and talk to us. You're all our trading buddies. Have a great weekend, particularly to you as well, mate. Have a brilliant weekend. I hope that 1,000-mile trip isn't too bad. 1,000-kilometer trip isn't too bad.
The problem with that is actually it'll probably cost $1,000. It's $1. It's $1 a kilometer at the moment. The fuel price. Anyway, have a great weekend yourself, and we'll catch up next Monday, of course, and we'll do it all again.
Fantastic. See you guys.
Thanks, Marlon, for looking after us. Have a great weekend, everyone. Bye-bye for now.